In the Black Out Loud.
Tax overhaul overdue. As Australia faces major economic challenges, carefully planned, thoughtful tax reform could be an important part of the solution. By Gary Anders. This article has been edited for audio purposes. Article begins. Tax reform has been a pressing issue for many years, with various stakeholders, from politicians to economists, advocating for change. In October 2023, the Paris-based Organisation for Economic Cooperation and Development, the OECD, released a detailed report that urges the Australian government to introduce sweeping changes to how it collects tax revenue. The OECD has recommended that Australia raise and broaden the goods and services tax, remove retiree tax concessions on pension earnings, replace property stamp duties with land taxes, and consider introducing inheritance and estate taxes. Australia's 10% GST rate sits well below the OECD's global average 19.5% consumption tax rate, with the standard GST rate in more than 24 countries now between 20 and 25%. The Intergenerational Report 2023 highlights the need for tax reform. The report notes that structural changes to the economy are projected to increase pressure on Australia's revenue base over the coming decades. Treasury predicts that changing consumer preferences, rapid technological advances, global efforts to decarbonise, and a more complex global strategic outlook will reshape the economic environment over the next 40 years. For example, tax receipts from traditional revenue sources, such as fuel excise and tobacco excise, are expected to decline over time. Global demand for bulk commodities, and therefore reliance on them as a source of company tax revenue, is also expected to fall. Treasury notes that in the absence of policy changes, its projections show an increasing reliance on personal income tax. However, the report also predicts that the percentage of Australians paying tax will decline as the population base ages. In the federal budget 2023 to 24, the Australian government announced plans to implement key aspects of Pillar 2 of the OECD/G20 two-pillar solution to address the tax challenges arising from the digitalisation of the economy. Pillar 2 introduces a global minimum effective tax rate where multinational enterprises with consolidated revenue of €750 million, that's 1.24 billion Australian dollars, are subject to a minimum 15% tax on income arising in low-tax jurisdictions. Another major change to Australia's tax payment structure will come into effect in July 2024. The amendments made by Labor to Stage 3 tax cuts will change the legislated rates by reducing the 19% tax rate to 16% for taxable incomes between $18,201 Australian dollars and $45,000 Australian dollars. They will also reduce the threshold to which the 30% tax rate applies from $200,000 Australian dollars to $135,000 Australian dollars. The existing 37% rate, which Stage 3 was to abolish, will instead be retained and will apply to incomes between $135,000 Australian dollars and $190,000 Australian dollars. The top rate of 45% will remain for incomes above $190,000 Australian dollars, rather than the $200,000 Australian dollar level envisaged under Stage 3. Individuals who have taxable incomes of less than $146,486 Australian dollars, which is nearly 90% of all taxpayers, will get either the same or a larger tax cut under the new plan. The remaining 10% who have higher incomes will get smaller tax cuts than under the original Stage 3. The tax cut for individuals who earn more than $200,000 Australian dollars a year, less than 5% of taxpayers in 2024 to 25, will be halved from $9,075 Australian dollars to $4,529 Australian dollars a year. However, While the forthcoming change will lower the income tax burden for many Australians, there is a broader view that tinkering around the edges of the tax system will not address the nation's major demographic shifts and structural changes. Eleanor Cassipides, Interim Chief Learning and Innovation Officer at CPA Australia, says tax reform in Australia has been challenging for decades. She says, the OECD has highlighted that we are far too dependent on income taxes, both for individuals and companies, and we need to see the GST contribute more to the Australian tax base. Australia's tax system is complicated. You have two different rates for companies, depending on how large you are. As we look at the future with a declining population paying tax, the burden on individuals is becoming increasingly unfair. Former Grattan Institute CEO Danielle Wood, who is now chair of the Productivity Commission, says the implication of not taking policy action is that future generations will need to bear the costs. She says, ultimately, there are three levers that governments can pull to address long-term budget challenges. They can make economic reforms to grow the pie, they can increase taxes, and they can reduce spending. Wood adds, given the scale of the challenge, governments will also need to find ways to reduce spending and/or boost revenue. After a decade of looking at this challenge, I have come to the view that we will need to do both. The scale of the challenge and the greater buy-in that can be achieved when the costs are spread across the population are arguments for looking to both sides of the budget for answers. More and more, questions of sustainability and intergenerational fairness are raised about our current tax mix. Expect them to get louder and louder over the coming decades without action. Leading independent economist Chris Richardson says that government spending should be the go-to lever to pull, rather than just focusing on taxes to improve fairness. Richardson says, spending really helps the low end, while taxes relative to income even out for pretty much everybody. They are equally negative. Independent Member of Parliament Allegra Spender has been spearheading a push to unite academic, business, and civil society leaders to build consensus on the need for tax reform and the way forward. Spender held a series of roundtables on potential tax reforms in 2023, with leading business groups and leaders, economists, unions, social sector organisations, and environmental groups in attendance. Spender says, the way I approach tax reform is to look at the why first, to ask, why do we need it? I look at it through a number of lenses. One is around productivity and how tax influences productivity, which is critical to Australia's economic growth. I also look at it through other lenses, particularly intergenerational equity, and making sure that each generation can continue to thrive and has economic opportunities. That is, how to ensure that we support our transition to low carbon and protect our environment. Spender says that one job is to explain the important role of the tax system to the broader community. She says, when we are worrying about climate, when we are worrying about housing affordability, and when we are worrying about productivity, we should be thinking about tax. I think that makes the political will easier, because the more the community is at least open to considering tax reform, the more that the politics starts to become possible. The intergenerational report showed us that we cannot just carry on. We have these demographic shifts happening and we have structural changes happening. That means that we have to deal with it.
In the Black Out Loud.